Hey friends, hope all is well. This is Joshua Stevens from Community Mortgage. Got a quick mortgage tip of the week for you. This week's mortgage quick tip is about the funnest part of the loan process. Are you ready for this? Everybody's favorite part of the loan process, documentation. Don't you love documents? I love documents. Everybody loves documents. Getting into the mortgage process, the loan process, I often tell people they're going to ask for everything but a blood sample. And it's true that some loan types are more document heavy than others. Some, in some situations, just don't really require a ton of documents. Others do. But at the end of the day, there's some core things that we're always going to ask for. And here's a quick heads up about those core documents that we're always going to ask about and why are we asking for those. So from the jump, 2 forms of identification. Most oftentimes, a driver's license and a social security number. The reason for this is the U.S. Patriot Act. There's a particular form for the Patriot Act where we have to fill it out and say that we've got your driver's license, put that number in there, and the social security number. So a lot of times I work with folks from outside of the United States, and so in that instance, we'll get the driver's license and then the permanent residency card, and we'll get all the numbers from that and be in good shape. So the next thing, 4 weeks of pay stubs, 1 month, 30 days of pay stubs. So what we're doing with that is just looking to see, make sure you are on the job. Everything is as reported, right? That, everybody's working and that we've got the pay stubs there to show you are getting paid, compensated for your work. So we're going to get that at the beginning of the loan process, right? Now, again, at the end of the process, by the end of the process, when we're in processing, underwriting, all that stuff, we're going to request updated pay stubs to show that you are still indeed on the job and everything is going as planned. Now, next thing, 60 days or 2 months most recent bank statements. Why do we ask for that? A couple things. So firstly, we're looking for where your paycheck lands. Let's say you've got a checking account and a savings account. If your check lands into your checking account, that's what we're looking to see. It's a double form of verification, really, or a form of double verification, really, to say like, all right, here's the pay stub, and then we're seeing where it lands. Everything ties out and checks out. So given this example, we've got the checking account. This is where your paycheck lands. And then we've got the savings account. Let's say that you've got several $1,000s in the savings account, and that's what you're going to be using for cash to close, right? Your down payment and closing costs. Well, we just got to make sure that that's all there. We got to see it. And the reason we ask for 2 months is because we have to season it. Seasoning? You didn't know that seasoning was involved in bank statements? Seasoning makes everything better. But really, the seasoning is where we've got to look and see that the funds have been in the account for at least the past 2 statements. That's just the guidelines and the parameters to make sure that the funds are coming from good sources. It is an effort in the rules and regulations to reduce money laundering. If you had illegally begotten funds, right? I can't even talk. Illegally gotten funds, right? You would need to get rid of it quick, right? Theoretically. The idea behind making sure that that has been there for 2 months is that the money's just been there for 2 months. Like it's just hung out. It's just greater evidence that there's no funny business going on. Also in there, when we're reviewing all the bank statements, what we're looking for is large deposits. That's looking to just make sure, again, that there's no ill-gotten funds or wherever the money's coming from. If we are going to use it on the mortgage, we got to account for it. There's got to be a paper trail. That's really the crux of all of this, is there's got to be a paper trail for everything. That's the bottom line. The end of it really is just paper trail upon paper trail to make sure every penny being used is accounted for and spoken to. So that being said, it can also be very frustrating for folks. My wife, even, for example, before we got married, she didn't really like putting her money in banks. And so she used to just save cash, right? And that can be exceptionally frustrating in the mortgage process because we can't use cash. Like if you have several $1,000s at your house, we can't use it. It's got to be in the bank for 2 bank statements. We got to see it on there for the 2 bank statements for that amount of time. So friends, the last thing is not on every loan type, but in some, particularly where there are income limits, or if the borrower is self-employed, we're going to get 2 years of tax returns and 2 years of W-2s. Often I will request these to be able to review them. And I know a lot of loan officers do this, that will request these to review it to make sure everything lines up and is good, regardless of the loan type. But it is for sure necessary if it is a loan type where there are income limits involved or if the borrower is self-employed. Reason being is if it is a income driven program or an income limited program, we got to make sure that you don't make too much to qualify for that program. And then also, if you're self-employed, we got to look at all the stuff to figure out what is the usable income number we can use. And that usable income number is very important because we got to figure out to make sure all this is going to check out, figuring in with debt to income ratios, as we've discussed several times. And also just ability to repay. That's another big thing about this. All the paperwork is all a paper trail to make sure everything is good, like gotten by good sources, nothing illegal, nothing illicit going on. And then the other thing is just to make sure that the continuation of income. Can we put together all the documentation to reasonably expect that you are going to be able to afford this mortgage going forward? That's it in a nutshell. We just got to do our due diligence to make sure that we can paper trail everything. We got to be able to show everything. Friends, that is the Mortgage Quick Tip of the Week. Remember that everybody's personal situation is unique, every property is unique, and therefore every transaction is a little bit unique. Reach out to me and we'll figure out how the laws, rules, and loan programs are applicable to you and chart a path forward. If I can be of assistance in any way, feel free to give me a shout anytime. Take care and have a good one.